Hello, welcome. Let us learn all how to prepare an income statement, and this is provided by Vinac Resources. Before we move further, let us look at some of the background facts about the income statement. It's one of the financial statements which is vital for a business or a corporation. It shows or provides a glimpse of financial performance of a business of a given period of time. It's prepared quarterly or by 6 months or in an annual basis. It can provide valuable information upon which a business can measure its profitability. Then it can be used to calculate various financial ratios which can measure the health of an organization. Let us quickly look at what makes up the income statement. The income statement usually contains two major portions. We have the revenues or the sales, and we have the expenses of a business. And these two leads up to the most important equation of the income statement, which is the net income is equal to revenues minus expenses. Up to that point, let us look at how the income statement looks like. It has the name of the company on top. Then on the sides, we have the revenues or sales and cost of goods sold. Minusing those two, it brings us to the gross profit. Then down under that, we have the expenses, a list of expenses. We have such things like rent, payroll, utilities, and whatever. Then minusing the gross profit minus the expenses, we come up with the IBIT. That is before expenses of interest and taxes. Then after we take out those ones or we subtract them, we come up with the net income. When the net income is positive, we call it net income, and when it is negative, we call it net loss. So let us look at the real example of how we can prepare an income statement using a sample of an account that we populated here. So as you can see in these yellow highlighted cells, we have some of the recorded examples of this ABC Incorporated business, and we have such accounts of sales, we have cost of goods sold, payroll, utilities, rent, and general administration, which are regular expenses, and then we have the interest expenses, and lastly we have the tax and expense of 35%. So this is only sample. Some of businesses can have much larger expenses while some have smaller like this ones. So the main thing is to understand the concept of how to align these things and how you can enter them into the income statement and how to calculate each of them. So let's, without looking at or just wasting some more time, let's look into the income statement preparation right now. So you see here, I have a sketch of the income statement whereby the upper portion of the income statement, we have the name of the company or business for that matter. Then we have the word income statement. Then we have the period upon which that income statement covers. Then as you can see, the highlighted green portion here represents, that's where we're going to put the sales and cost of goods sold. You don't have to have these colored things here, but I just put it for instructional purposes. Then on the light blue, we have where we can include the expenses. Down here, we're going to put the interest expense, and this one, we're going to put the taxes. You can see this general expenses gonna run here. Then after that, we're gonna have the income before tax in interest and taxes are taken out, where we call it IBIT. Then from there, from here we have only two expenses that are left, which is interest and taxes. From there, we're gonna have the net income. So let's try to start preparing our income statement, and the first thing is to record revenue or sales, and in this matter is sales, which was $850,500. Then we're gonna have the cost of goods sold, which in this matter was $350,000. So if we minus sales minus cost of goods sold, we're gonna have 500,500 as our gross profit. Gross profit is the direct cost of those goods that have been sold. So before you take any expenses out. So let's go to the next step, which is putting down the expenses in this area. And we're going to start with payroll as the highest expense. And we're going to copy from here, which is 120,000. Then the next we're going to put utilities, which is 12,000. Then we have rent, which is 60,000. Then lastly we have general and administration. General and admin, which is 10,000 per year. So when we do that, we have an income before interest and taxes of 298,500. Now we go to the next one, that's EBIT. IBIT, we're gonna go to interest now, the interest expense, and it is 24,000 per year. So we are left with income before taxes, which is 274,500. So this is the income that a business will get, or will get after taking out all the expenses, operational and interests, whatever, minus before paying and taxes. So if it's not for taxes, this is the income the company will get. Now let's go to the interest tax expense, and we are told here that the tax is 35%. So we're gonna put on a formula here, we're gonna put with times 35% times 274,500, it's gonna be $96,075. So once we put that one, you can see we had formatted ourselves to have a formulas inside. So it has subtracted the IBT, that's income before taxes, minus the taxes to get 178,425. So this is the income for the APC that was made as of December 31st, 20XX. If this number was negative, it should be net loss, but when it's positive like this, I will leave it as a net income. So that's how simply you can be able to make an income statement based on anything. Anything thing. It, as I said, businesses can record their expenses, revenues in different manner, but you have to remember that the first portion includes all the cash inflows, the company, what a business gets into their company, money that comes in, while expenses on all this section here represents the money that is going out of the business, maybe in payments of the different expenses, anything that goes out gonna be in this section. Then you're gonna have IBIT, and you have to know that this comes after you take out everything and you are left with only interest and tax. Then when you take out the interest, you take out the I here, which is I in of IBT, interest, you take it out. Then here you just are left with taxes, IBT. Then when you take out the taxes, you don't have anything except the net income of this. That's simply how you can do. If this expense might be long, might be huge, these incomes might be long, might be huge, but this is the basic formula, a basic example of how you can be able to just approach any situation of making an income statement. So that should mark the end of our presentation. And if you have any questions, comments, please just feel free to give or to leave it so that we can make this better or we can know how we did. And if you want to subscribe to our VNAC resources, please do so. Thank you and keep watching to our other presentations that we are offering as we move ahead in discussing other finance or accounting topics. Thank you.